What's going on, guys? So let's kick off with the weekly market brief then. So this week we kicked off at 75.23 on the open. So looking at the bigger time frame on the daily chart. So last week we seen price sort of plummet down and test the lows of March at 71 to $70 a barrel. We made a good push up from there then. So this week we have been pretty much range bound, top of the area of support of 77 and retaining the area of 75. So on this pattern looks like a double bottom pattern, which is a reversal. So it looks like price is looking to head up in the next few weeks or something. That is on the bigger time frame. So we will see if price breaks out from the support marked at 77. We can see price head up to $80 a barrel and testing that next support area of 83. Moving down to the intraday time frame on 30 minutes chart. Again, we can see we're range bound. Top of the area of support 77 and 75, holding for the bottom of the range. So again, I see price sort of breaking out from this range one way or another and pushing up. So the diesel market, we will see a penny increase for next week. Moving up to sterling against the dollar. We opened on 125.57. We made a weekly low of 124.35 on Tuesday, and we made a new high for the year of 126.77 yesterday. However, we had rejected that, and then today the Bank of England have raised rates by 25 basis points. This is the 12th rate hike in a row. On the initial headline, on the news release, we saw sterling push up slightly to 126.14, and then we plummeted down as Andrew Bailey, the governor of the Bank of England, started speaking. There's nothing. What he mentioned was that they're going to stay the course. The inflation that they had predicted was that it would have dropped by now. However, it hasn't dropped, so they haven't. He hasn't mentioned where they'll be more aggressive for rate hikes. He is saying that they are data dependent. So they are expecting for the next 2 quarters, inflation will be dropping down quite significantly. So the base rate that sits now at 4.5% is not been this high since 2008. We know what happened in 2008, the financial crisis. So on the bigger time frame, on the daily chart, if we have a look, again, big bearish candle, which took out price action for the last 4 or 5 days. So we are testing 12500 again. The support area 124.20 still remains. So if we do sort of drop for GDP figures for the UK economy is out tomorrow. So if we do drop, we will be testing 124.20 on the technicals. So apart from that, we do still remain bullish, meaning the pound is looking to push up because the US dollar, the Federal Reserve they have completely paused now, and that's the pivot. So the dollar should be selling off now, and we should see sterling pushing up and making gradual highs as the months get along for the year then. And that's all. Join me again next week.